Welcome back, my friends. The news today is that if you are looking to buy a skyscraper, there seems to be a sale on them in Los Angeles and San Francisco. LA's third tallest tower just sold for a whopping 45% below its 2014 price. This may be priciest downtown Los Angeles office deal this year. The region's third tallest tower still trades for well below prior sale as challenges vex big urban centers. Also, a high-end office tower in the financial district is about to hit the market with a 45% discount. Another Los Angeles office building sold for at 52% less than 2018 price. But before we get into that, please press the like button and leave us a comment below. Please hit the subscribe button and hit the bell icon so that you are notified of upcoming videos. And before we continue, a word from the sponsor of this video. Today's sponsor is ProWorldNet.com. ProWorldNet.com is a job website specifically dedicated to licensed professions. Doctors, including any type of specialty. Nurses, and that includes all grades of nurses. Lawyers, regardless of area of legal focus. Teachers and professors, from kindergarten through graduate school, as well as any kind of job that requires a government license or certification. And ProWorldNet.com also includes short-term gig-type jobs as well. So be sure to check out ProWorldNet.com if you are looking for a job or an employee. AON Center, the third tallest tower in Los Angeles, has sold for US $147.8 million, about 45% less than its last purchase price in 2014, as office values continue to suffer from high vacancies and financing costs. The sale is the largest office deal this year in downtown Los Angeles, which has been among the hardest hit U.S. office markets since the pandemic, as remote work becomes more popular and escalating interest rates drive down values, wiping out owners' equity. With a new low basis and a well-capitalized owner, AON Center will be competitively positioned to attract and retain tenants who desire a well-amenitized skyline tower in the heart of downtown Los Angeles. Sean Fulp, a Colliers broker representing the buyers, said in a statement, "The buyers are a group comprising Carolwood, a Los Angeles-based investment firm, Daniel Abrams and Adam Tischer, who is also a broker with Fulp in the sale. The seller, San Francisco-based Shorenstein, was represented by Kevin Shannon of Newmark Group. Almost 30% of downtown LA office space was available for lease or sublease in the third quarter, brokerage Savills reported. Many tenants and investors are turned off by the neighborhood's tough commutes and high homeless population. Rents downtown were 40% lower than in more desirable areas, such as Century City, where the availability rate was 16% according to Savills. An affiliate of Brookfield, downtown's one-time largest landlord, defaulted on 3 office towers in the area this year. An added blow for sellers was a voter-approved 5.5% transfer tax on real estate transactions, greater than US $10 million that took effect APR 1. A $148 million deal for one of the tallest towers in Los Angeles may be the priciest in the city's downtown this year at a time of major financial challenges for urban office properties. Private investors led by Los Angeles-based Carolwood LP acquired the 62-story AON Center, built in 1974 at 707 Wilshire BLVD, for about $147.8 million or $133 per square foot, according to brokers at Colliers, who represented the buyer. The sale price is still well below the $268.5 million or $242 per square foot that the seller, San Francisco-based Shorenstein, paid for the tower in October 2014, according to CoStar and public records. Shorenstein representatives did not immediately respond to an emailed request to comment from CoStar News. AON Center, last renovated in 2009, contains more than 1.1 million feet of space and is downtown Los Angeles' third tallest tower. Colliers said in a statement that the transaction is the only sale in the region since 2020 for tower properties spanning more than 1 million square feet. The ownership group's acquisition of the iconic AON Center exemplifies the flow of private capital into Los Angeles, seizing the opportunity created by market dislocation, Sean Fulp, Colliers vice chair of West Region Capital Markets, said in a statement. The deal for AON Center comes after other potential buyers were reported to have explored buying the property this year, including the parent firm of nationwide parking lot owner Wally Park. AON Center is among several high-rise office properties that have gone up for sale, faced foreclosure, or have fallen into receivership in downtown LA over the past 3 years. Across the street from San Francisco's luxurious Palace Hotel, a 20-story office tower at the corner of New Montgomery and Market Streets is headed for a major sale. Multiple sources have confirmed that, come January, global investment management firm Barings will launch a search for a buyer for 33 New Montgomery St. a 240,000 square foot building that's still home to tech tenants like Bitly, Shopify, and Stackla. The building stands out for its 5-story clock tower and spire that stand over Market Street. When it last traded hands in 2014, the property sold to Cornerstone Real Estate Advisors, now a Barings company, for just under $148 million. But more than a decade later, 33 New Montgomery has lost roughly half of its value. The building will hit the market with a price guidance of about $80 million, or about $333 per square foot, according to an individual familiar with the listing, who estimated that the building is about 70% occupied. Real estate brokerage Newmark has been retained to market the property. If the building trades at a discount, it would join a growing list of San Francisco office properties that were acquired by new owners this year in fire sales, which have set a new gauge in terms of pricing amid waning demand for office space. With the pandemic-era shift to remote work still very pronounced in San Francisco, where tech and other office-based tenants once competed aggressively for limited space, year-end market data published this week shows that more than 35% of the city's offices sit vacant. The situation has caused the values of many of San Francisco's once coveted office towers to fall below the values of their loans, sparking foreclosures and discounted sales. In the case of 33 New Montgomery, the building's 2014 acquisition was supported with a $75 million loan. Public records show Barings did not respond to messages seeking comment, as institutional investors work to reduce their exposure to office properties. Local buyers are stepping in to scoop up distressed assets. The list of buildings that recently sold include 550 California St., a 13-story building in the heart of the financial district once occupied by Wells Fargo Bank that sold in September for just over $40 million or $114 per square foot, less than half of what it was worth nearly 2 decades ago. The longtime home of Union Bank, a 300,000 square foot office tower at 350 California, sold for $61 million this summer, which represents a nearly 75% price drop from what it was worth prior to the pandemic. And the 157,000 square foot office building at 60 Spears St. in the financial district sold in August for $41 million, less than half of what it was worth when it last traded in 2014. A Los Angeles office building located near Century City and Beverly Hills sold for about 52% less than its price 5 years ago. Harbor Associates and F&F Capital Group bought the 5-story property at 1640 Sepulveda BLV for about $44.7 million, according to a statement Tuesday. A Los Angeles office building located near Century City and Beverly Hills sold for about 52% less than its price 5 years ago. Harbor Associates and F&F Capital Group bought the 5-story property at 1640 Sepulveda BLVD for about US $44.7 million, according to a statement on Tuesday, Deck 26. The building last sold in 2018 for US $92.5 million. It is the latest sale of an LA office building in a market that's been pressured by the rise of remote work and financing challenges brought about by soaring interest rates. Recently, the Aon Center in downtown LA sold for US $147.8 million, about 45% less than its previous purchase price in 2014. The building at 1640 Sepulveda Boulevard was constructed in 1987 and has had more than US $11 million in renovations, including upgrades to tenant spaces as well as a redesigned lobby. It was 80% occupied at the time of the deal's closing, according to the statement. After several years of kicking the can down the road, we are now beginning to see distress hit the market, said June Choi, Harbor principal. There are still compelling opportunities to find the hidden gems at a deep discount to replacement. The deal is the second real estate acquisition for the joint venture in the past 2 months. Harbor and F&F acquired an industrial portfolio in Carlsbad, California, for about US $21 million in November. But what do you think? Please press the like button and leave us a comment below. Please hit the subscribe button and hit the bell icon so that you are notified of upcoming videos. Please share this video on social media. Thank you for watching.